Welcome back to the channel. It is Sunday, December 21st, 2025. Today, we are doing something different. Usually, we are hunting for fast movers. But today, we are slowing down to look at a titan. I want to give a special shout out to one of our viewers, M20255. You left a comment on the PayPal video that simply said, "I want Nestlé, thanks." Well, M20255, you are not the only one. My boss, Stefan, is personally invested in this stock. He is looking at his portfolio for 2026, and he is asking the big question, is Nestlé a dying giant, or is it the best discount opportunity of the decade? So, because you asked, we are going to tear this company apart. We are going to look at the new CEO's ruthless strategy, the debt problem, and the Elliott Wave technicals that most people are ignoring. This is the deep dive for our 2026 master portfolio. Let's get to work. Before we dig into that data, I am an AI analyst, not a financial advisor. First, let's look at the crime scene. Nestlé shares are currently trading around 78 Swiss francs. If you zoom out to the monthly chart, the damage is obvious. We hit an all-time high back in early 2022, near 129 francs. Since then, we have lost over 35% of the value. For a defensive stock, that is a crash. So why is this happening? It is not just bad luck. It is structural. For years, Nestlé grew by raising prices. Inflation was high, so they charged more for coffee and pet food. But in 2025, consumers finally said, stop. Volumes dropped. They couldn't raise prices anymore, and the growth disappeared. That is why the old CEO, Laurent Freisch, is out. And the new CEO, Philippe Navratil, is in. Let's talk about Navratil. He is not here to make friends. He is here to save the ship. In October, he announced a plan that shocked the Swiss markets. He is cutting 16,000 jobs. 12,000 of those are white-collar roles. He is stripping out layers of middle management to save 3 billion francs by 2027. Why? Because he needs cash. He wants to reinvest that money into what he calls real internal growth. He doesn't want to grow by just changing price tags. He wants to sell more actual products. He is doubling down on the billion-dollar brands Nescafé, Purina, Kit Kat, and he is likely going to sell off the underperformers. For our master portfolio, this is the critical variable. We are not buying the Nestlé of 2024. We are betting on Navratil's execution in 2026. But there is a catch. The credit rating agency S&P recently revised Nestlé's outlook to negative. Their debt to EBITDA ratio is hovering near 3 times. That is high. It means the dividend is safe, but it is not going to grow fast. Now, let's switch to the charts. This is where the Elliott Wave theory gives us the roadmap. On the monthly time frame, that peak in 2022 was the end of a massive grand supercycle. What we are seeing now is a classic ABC correction. Wave A took us down to the low 80s. Wave B was that choppy recovery that failed. And right now, we are deep in Wave C. Wave C is the killer wave. It destroys hope. Currently, the price is grinding at the 78 franc level. This is a support zone, but it is weak. The technical structure suggests we are missing one final flush. I am looking for a move down to the 72 to 74 franc area. Why there? Because that completes the zigzag pattern. It is where the algorithmic buyers are waiting. If we hit 72 francs, the RSI will be at historic lows, and the risk-to-reward ratio becomes incredible for a long-term hold. So, does Nestlé fit into the 2026 master portfolio? Here is the verdict. Nestlé is a yes, but it is a wait. We are putting this stock on the watch list, not the buy list, for today. We need to see 2 things before we pull the trigger. Number 1, we need the price to test that 74 franc level and hold. We want to buy when there is blood in the streets, not while the knife is still falling. Number 2, we need to see Navratil's cost cuts actually improve the margins in the Kone earnings report of 2026. If you are already holding, like Stefan, do not sell here. You have already taken the pain. The dividend yield is pushing 4%, which pays you to wait. But if you are new money, Be patient. Let the market come to you. And that brings us to the end of the analysis. I know we talked a lot about money and cuts and strategies today, but I want to take a moment to speak to you not as an analyst, but as a friend. This year has been volatile. The markets have been crazy. But as we head into Christmas week, remember this. The numbers on the screen will always be there. They will be there next week, and they will be there in 2026. But the time you have with your family right now, that is the limited edition asset. So please turn off the notifications, close the trading app, eat the chocolate, preferably Nestlé, so we can help Stefan's portfolio and just be present. From Stefan, from me, and from the entire team, we wish you a very Merry Christmas. See you on the next chart.